Hello and welcome back. This is Christopher Aaron. It is May 20th, 2021. This is the iGold Advisor channel, and we're going to have a proper silver price update in this broadcast. I want to make sure before we go any further that you hit the red subscribe button and the bell icon so that you'll get notified when these updates come out. And if you'd like to see a little bit more depth, I just want to bring this to your attention. Last week, I had the pleasure of being interviewed with the folks over at Palisades Radio. So check out the Palisades Radio link. I'll post that below, and you've got a nice lengthy interview there with even more depth on the types of things that we talk about here on this channel in just a slightly different format. So we're going to update the silver price. We're going to look at a lot of the inflation statistics that are coming out and how this is impacting the world. So the big thing to keep in mind this week is that inflation is becoming a growing problem. You look at some of the statistics here that are coming out. U.S. inflation soaring to a 13-year high, right? Look at the figures here. This is the CPI, which is at a 13-year high, but the PPI, the producer price index, as opposed to the consumer price index, the PPI is actually probing above its 2008 levels right now. So it depends on whether we're looking at producer versus consumer prices. Either way, inflation is at least the 13-year high. And then you look at some of the rhetoric here that's coming out of certain central banks. You know, for example, the Bank of Canada saying that QE, or quantitative easing, can widen wealth inequality. Yeah, really? You think so, guys? I mean, you are the ones implementing this policy, and you're just realizing now that this can widen wealth inequality? I mean, this is a joke. I can't believe that they're even publishing things like this, as if they don't know the effects of their own policies ahead of time, right? And then you look at some of the quotes here coming out of the Bank of Canada. And by the way, it's not just the Bank of Canada implementing these policies. It's the Bank of US, the Federal Reserve. It's the Bank of Japan. It's Bank of England, European Central Bank. But look at some of these quotes here coming out of Canada. While the QE program stimulated demand and helped create jobs, it also boosted wealth by inflating the value of assets. Well, okay, maybe this seems nice on the surface, but of course, those assets aren't distributed evenly across society. So as a result, QE can widen wealth inequality. All right, guys. So you're implementing these policies that you really don't know, or you're pretending not to know what the effects of these policies are. But we know that it widens wealth inequality. Of course it widens wealth inequality. Why? Because when they're printing money, which is, of course, a synonym for QE, quantitative easing, and they create this inflation, we have to remember that inflation is a hidden tax. It's just the same as if they came out and said, we're going to implement a new tax on you by 3 or 5 or 10%, whatever the real figures are. Just we're not going to tell you about it. We're going to do it backhandedly while you're not looking. And even more insidious about this is that the inflation tax is the most regressive of taxes. It primarily impacts those who are least able to afford it. And we're talking about the poor and those people on fixed incomes, because a greater percentage of their income then goes to pay for food and energy and the things that they need. And these people, the poor and those on fixed incomes, are not able to benefit from the inflation because they do not have either one of these two things. Number one, in order to benefit from the inflation, one must have disposable income or savings to invest, which is not the case here. But I hope that if you're listening to this broadcast, you will really take the message to heart that the first thing you need to do if you want to be on the benefiting side of the inflation that is already here and that is coming down the pike, you've got to get your disposable income up, your savings. I see a lot of people ignoring this and just saying, well, I could take a meager amount of savings and hope to really benefit from it. I would say your first focus should be boosting your income. So what do you need to do on a personal level? Do you need to get a second job? Do you need to increase the value of your labor by getting another degree or a certification or something? What do you need to do? So don't overlook this. Then the second thing that one needs to do to benefit from the inflation, you have to know that the inflation is coming ahead of time so that you can diversify some of your savings into those assets which will benefit from the inflation. If you wait until everyone on the street knows that the inflation is coming, and look, we're not that far away from that now, so I don't think you have that much more time, because you look at these mainstream articles that are coming out. I mean, as soon as CNN and MarketWatch are talking about inflation, you've got to believe that we are not that far away from the person on the street starting to say, hey, what's happening here? So you've got to know ahead of time, and then you have to diversify your assets into things which will benefit from the inflation so that you won't be taken down with that wave that is coming in. You'll actually ride the wave and end up at a higher point than before the inflation. You have to have these two things. So, assuming you have that first aspect here, what is one of the things that you can do to benefit from the inflation over the long run? It's not going to happen every day, every week, or even every month. But one of the things you can do is consider precious metals as a way to hedge, and not only hedge, but benefit from the inflation. Because in an intense inflation, they're not only going to hold their value, but when you have a floodgate of people trying to come in to a small market such as silver, the price is going to rise way above and beyond just the 3 or 5 or 10% inflation per year. You're going to have an outsized return over a short period of time. Yes, over the very long run, silver will merely hold its value versus inflation, but it tends to go from being severely undervalued to severely overvalued, and I think we are in one of those cycles right now. Not a whole lot to talk about on the short run, but there is a heck of a lot to talk about here when we look at the primary silver chart and we start to take a look at what are the actual trends here that are taking shape in silver. What do we see? A relatively flat black resistance, horizontal resistance, squared smack at this $30 level, and what? Rising support now here, clearly emerging. This pattern, ladies and gentlemen, is called an ascending triangle. This is a bullish pattern in which the resistance, the sellers, are relatively flat, and the buyers are emerging at higher intervals throughout time. Now, we're getting close here to the third attempt at the $30 level. Based on my study of these patterns across dozens of markets going back for the last 15 years, I do not believe, on a highest probability basis, I do not believe that silver is going to break 30 on this attempt, which is basically functionally setting up right now. The third attempt at 30, I do not believe it's going to. I think you're going to get one more hit there at the 30, and then we're going to back off and get one more test at the rising support. And that should set the market up for sometime, let's call it mid to late summer, perhaps into the early fall. That should set this market up really nicely to just let this consolidation here play out a few more months further so that the next major attempt, we're talking the fourth attempt here, can break this ascending triangle consolidation higher. And then we'll talk about where silver is going to end up after that. This is the primary look at the silver market. Now, would I, for example, me, myself personally, most of our clients here and most of our research subscribers are mostly to fully invested at this point. So it's not like we're waiting for, this, let's say $3, $4, $5 pullback highest probability, yes, this should happen, but we're not really sticking around waiting for this because, maybe this is the time where instead of a $5 pullback, you only get like a $2 pullback, and then you break 30 a little sooner than we're expecting, right? I wouldn't really want to be sitting on my hands here waiting a whole lot longer. This is the highest probability expectation for silver at this time. Now, let's say that you wanted to leverage the gains in silver, and let's say you wanted to say, okay, reasonably speaking, when silver breaks 30, what is a reasonable target? Well, as a first intermediate term, I think, expectation here over the next 1 to 2 years, after breaking 30, I think it's quite reasonable to expect that silver could be going back to the $50 mark. For starters, it's not going to happen overnight, but for starters, this could certainly happen within the next 6 to 18 months after breaking the $30 mark, right? That would be an 85% gain. But let's say you're from the standpoint of, okay, you don't just want to protect yourself and have a gain like that. You want to really benefit from the inflation that is coming. You could consider the silver mining complex, such as Silver Miner X here. I'm not going to give this away for free. This is a company that I do own shares in and our subscribers own shares in, that just to get back to the same 2011 peak would have to rise 340% just to get back to that same 2011 peak. So if you think scenario A is going to happen, there might be something to be said for investing in scenario B here and getting an outsized gain for that. Now, some people say, well, maybe the silver miners have had dilution over the past number of years, and so you're not comparing apples to apples. That is correct on one level. However, if there's been dilution of shares and they've gone out and they've discovered more silver in that amount of time, that dilution can actually be accretive. You can actually have a company that is better off than it was in 2011 because their assets and their production has grown, even though maybe they've issued some new shares along the way. That is the case for the silver miners that we are investing in here. They are improving the companies ahead of time. So there's a major catch-up opportunity, we believe, here in the silver miners. I think there's merit to owning some physical silver. This is your savings account. This is what's going to protect you come hell or high water. And there's something to be said for making targeted investments in certain silver miners to really get those life-altering possibilities here over the time coming ahead. Remember, you need the two things to benefit from inflation. You've got to have the disposable income and savings to invest, and then you've got to know it's coming ahead of time and get your assets into things that will benefit from the inflation. If you'd like to learn more about the exact investments that we're making here, including that Silver Miner X, as well as the other silver miners and the gold miners that we're investing in, you can do that through our premium flagship research and analysis service. It is called Precious Metals Intelligence. We produce weekly videos such as what you are seeing now, but these cover not only the silver market, but every single week the gold market, as well as updated research and analysis on what to expect for the US dollar, the US stock market, the rest of the commodity complex. We also cover the mining sector as a whole, and you get flash updates going right to your email the moment that we make a decision here. You get to know about it first in this service. You don't have to wait for the free videos to come out, which could be a week or two after we notice something happening that warrants your attention. If you would like to speak to an independent analyst such as myself, who is not taking fees from any of the companies or any of the funds that we are researching here, trust me, I get offered from a lot of these companies to take kickbacks and whatnot. But I say no, my business model is not geared toward that. My business model is to remain fully independent so that I can offer you the best research and analysis that I am capable of, that my whole team is capable of here putting together Nothing more and nothing less. Independent research and strategy. It simply was my observation going back into the last decade that there were very few independent analysts in this sector. Most people were wanting to, tell you to buy or sell, but then they also sold the metals, let's say. I mean, look, nothing wrong with that. Everyone's got to have a business that they do. If you're a salesman for the metals, that's fine. But it's also not the most independent type of analysis. Do you understand what I'm saying? So if you would like to speak to me one-on-one, know that you can reach me. We do phone, voice, Skype, whatever type of consultations you would want, helping you to navigate these markets in the best way that we are capable of. Once again, make sure you hit the red subscribe button, and thank you very much to those people supporting this work on Patreon. Look, guys, takeaway for this week, the inflation is here. Not only that, it's probably going to get worse. You're having the very beginning, I'm talking the very beginning of a mainstream recognition for this inflation. Be extremely careful how you navigate your life situation, your savings, your discretionary income. Be very careful of that over the next 5 to 10 years, because the central banks have explicitly stated their policies. They know that it's causing more inequality. We've seen the quotes from them. You just have to decide what side of that inequality you are going to be on. I want you to be on the receiving side of it. So please make wise decisions. I think there's a lot of merit to owning a diversified inflation protection set of assets here over the next 3 to 5 years. Thank you very much, and I'll see you guys for the next video soon.